Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
But what I see here, and I was thinking of this the other day, is it reminds me a lot of the old Peanuts comics, where every fall Lucy would get out there with the football and she'd set it down on the ground and she would coerce Charlie Brown into coming along and kicking the football. Well, of course, as we all know, Charlie never got to kick the ball. Lucy always pulled it out from underneath him. And I kind of look at the mortgage industry, the servicing end of it in particular that way, because you got to think about it. In many cases, the loan that you were put into was not a good loan in the first place. The person who gave you that loan knew it wasn't a good loan. The Wall Street banks that came up with these crazy ideas should have known better. Now, admittedly, they didn't, otherwise they wouldn't be out of business. But they should have known that these were not good products. But yet, when you're faced with an issue regarding your house, so many people go back to the bank. It's like Charlie Brown going back to Lucy and believing this time that Lucy's not going to pull the ball away. Well, what's going to keep the bank from not pulling the ball away from you this time? Absolutely nothing.
Well, I love that analogy. That's everyone remembers, it's the Charlie Brown show and the comic books, like you said, and the loss mitigation departments. I mean, they're not all evil. Another thing I want to point out too, reeling back just a little bit, you mentioned the people that put these people into these loans knew that they weren't good loans. I believe my reality is, my thoughts are, from some of the ones that I've seen, you and I've seen doing the forensic audits and whatnot, they could have qualified for an FHA loan in those times, but it was easier for these people to put them into these subprime loans because the documentation was easier. It was just easier.
It's not just that they were easier, it's that I know that your firm at Velocity Financial is FHA approved, but what percentage of all lenders today, when we probably have maybe 30% as many lenders as we had 2 years ago, what percentage today is FHA approved?
Actually, in the state of Arizona, of the lending institutions, less than 15% of all qualified mortgage firms, brokerages, banks, credit unions, less than 15% are licensed by the Federal Housing Administration. Velocity Financial is proud to be one of those firms.
Right, and what I saw back in the peak of the market days is, of course, everybody thought the real estate was going to go up forever. Everybody wanted to jump on board and buy 3, 4, 5, 6 properties. And I always tell the story that I knew we were in trouble. I knew we were going to be hitting the top of the market long before I ever developed any of the models. When I walked into our bank one day and I saw that they had a loan that was 100% financing for someone to buy an investment property, and they didn't have to prove their income, and they only needed a 620 FICO score, which, considering everything now, Michael, to get a Fannie Mae loan today, what kind of a FICO score do you need if you're an investor?
If you're an investor,
Mm-hmm.
720 is
720 and probably 20% down, right?
At least 20% down.
And certainly
correct.
not stated income anymore.
No, that doesn't exist.
Yeah.
Significant cash reserves, the whole 9 yards.
Right, and so these banks knew the kind of garbage that they were giving to people, and yet we're supposed to trust them to get us good loan modifications. And I think in one of the later segments we're going to talk about the guidelines that just came out with Fannie Mae and Freddie Mac regarding their new fancy schmancy loan mod program. And to be honest with you, I don't think it really does much for people at all.
I'll tell you what, we will talk about that in the next segment. And to people that are in the mortgage or real estate industry, or have been in the real estate or mortgage industry, it's going to sound a little bit like a comic bit, because this is this might as well be bath tissue. I don't really know why they even came out with it, but it's good stuff. We are going to talk about that along with a few other things. So real quick, I know we haven't had a chance, Dan, to talk too much about the foreclosure sharks. We are going to talk maybe briefly, we'll touch on that a little bit later. How do people get a copy of this white paper, the foreclosure sharks, things that people need to be looking out for?
Yeah, the foreclosure sharks, you can go to my website at mortgageanswerman.com, and there'll be a link there. You just click on it and pick yourself up a copy, and it'll help to, if you're in a foreclosure situation and people come knocking on your door, it'll help you to at least know what to look out for.
Okay, and so mortgageanswerman.com for the foreclosure shark. Also, for more information on loan modification, or if you're not sure if you need a loan modification, a refinance, or even a short sale, you'd want to call 888-MOD-INFO. That's 888-MOD-INFO. Or if you want to go online, you can go online to modificationhotline.com for more information. Or if you want to talk to Dan or myself directly here locally in Phoenix, Arizona, it's 480-835-6248. That's 480-VELOCITY. Folks, I know that was a lot of information. We'll be back in just a few moments, and we'll get right back into this. Thank you.